Dumelang. Example one, which is the full cash flow statement. I adapted this from DBE Grade 12 Accounting Notes. The following information was extracted from the financial records of Morningside Traders Limited. You are required to prepare the cash flow statement and notes for the year ended 28th of February 2023. And you will realize you were given depreciation on equipment, but depreciation on vehicles, it's a question mark. You were also given interest on loan, profit before tax, as well as income tax. Now, to prepare note number one, and which is what we're going to start with when you prepare the statement of cash flow, you will simply start with note number one, which relates to reconciliation between profit before taxation and changes in working capital. Now, what we're going to do here, obviously, whatever you get between the two, between your operating profit before changes in working capital and changes in working capital, will be cash generated from operation. I will simply start with my profit before tax, which was given. So that was an easy mark to earn. You were also given interest expense, which was quite easy as well. And your interest expense was 78,000 rand. We are missing depreciation though. And we can't work out the entire depreciation amount until we have figured out depreciation on vehicles. Now, what will help me calculate depreciation on vehicles is by me checking out the entire question. And the only thing that I pick up here is that under non-current assets, I've got tangible assets at the beginning of the year. There was 1.8 million. At the end of the year, it is 2,643,000. And I don't think that will help me with anything because it's quite complex because you realize tangible assets went up and normally depreciation will reduce tangible assets. So I also need more information about a tangible asset that was purchased because obviously it went up. It means that we bought a tangible asset. However, depreciation on that reduced what we had as a carrying value. Remember, if only depreciation was recorded and there was no purchase, then your carrying value at the beginning of the year will be greater than the carrying value at the end of the year, right? So there is more information to this. And let me just go to my extract from notes to the financial statement. And there it is, all right. I will look at depreciation because that's what I need more. And depreciation only affects accumulated depreciation. You will note that accumulated depreciation on vehicles at the beginning of the year is 327,000, and accumulated depreciation on vehicles at the end of the year it's 519,000, and that's all I needed. That is all I needed because accumulated depreciation is only increased by one thing, and the only thing that will increase accumulated depreciation is depreciation. Now, you will note that depreciation at the beginning of the accumulated depreciation at the beginning of the year was 327,000, and accumulated depreciation at the end of the year is 519,000. So it went up, and the only item that can increase accumulated depreciation is the depreciation for the year, which is 192,000. And that 192,000 enables us to calculate depreciation for the current year. We will add it with the 63,000, and the depreciation for the current year, which was added in your statement of profit or loss, is 225,000. It was subtracted in the statement of profit or loss. Here we're adding it back to cancel that so that our profit excludes, in essence, excludes your non-cash item, which is depreciation. Remember, we're adding back interest expense because it is shown separately on the face of the cash flow statement. Operating profit before changes in working capital will be 660,600 plus 225,000 plus 78,000. That will give you 993,600. That's it. Okay. I'll just work step by step. And the next item that I need to take into account here will be my inventory. My inventory will note that at the end of the current year, it is 424,320. At the beginning of the year, which is the end of the previous year, it was 433,800. And you will notice that inventory went down. Please watch my previous videos. That is a cash inflow, and you'll understand why I'm saying it's a cash inflow. If you fail to understand that, please check out my previous videos. All right. Now, a decrease in inventory will be 433,800 minus 424,320. A decrease in inventory results in a cash inflow. So it's without brackets. Right. And the next one will be on trade and other receivables. Let's check our trade and other receivables. Now we've got trade and other receivables for the current year. Our trade and other receivables amounted to 286,500. From the previous year, it was 265,800. So we note that our trade and other receivables have gone up. But remember, in trade and other receivables, we need to exclude sales income tax if it was owed to us by SARS. So I don't know if SARS income tax was included in any of those two amounts. So I'll have to check additional information. And when I check, I am given trade and other receivables. And for 2022, I was given SARS income tax of 21,000. I need to exclude that 21,000. And I recalculate my totals for 2021. All right. Once I've excluded that, then I can simply determine whether I had a cash inflow or cash outflow from trade and other receivables. And obviously, trade and other receivables, you will note that it has actually gone up. All I have to say is that there is an increase in trade and other receivables. I'm going to take current year's trade and other receivables minus previous year's trade and other receivables. Question is, how did I get that 244,800? Let's see how I got it. You need to check what trade and other receivables for the previous year was. Trade and other receivables for the previous year was 265,800. But that 265,800 included sales income tax. So I have to exclude sales income tax. I will simply take that 265,800 and minus 21,000. And for 2022, my total trade and other receivables will be 244,000. Do you now understand why I got the 244,000? Great. And obviously, it will result in an increase in trade and other receivables. An increase in trade and other receivables. Cash-wise, it's not really that wise because it results in a cash outflow. It simply means that we bought more stuff that we actually sold on credit. So our cash is tied up with our debtors at this moment. So we are losing a cash. We are losing is an opportunity cost in this case. We are losing, not really losing, but we're going to get it when they pay us back. At the moment, if we were selling our goods for cash, we have a good amount. So right now, what we have lost from credit sales will be 41,700. Remember, whatever you buy on whatever you sell on credit, you still have to buy it. So there was cash that went out of 41,700. It's tied up with your trade and other receivables because you're not receiving it at the moment. And the tidying up or the tying up of your cash in your trade and other receivables increased by 41,700, which is a cash loss. That's what it simply means. All right. Remember, a decrease in trade and other receivable indicates that our debtors are paying us back. Let's go to trade and other payables. Again, I can't take trade and other payables that is given to me under the statement of financial position. They need to break it down because trade and other payables might include sales income tax as well as shareholders for dividends and accrued expense that relates to interest on loan. And those three items, we need to exclude them when we compare our trade and other payables for the current year and the previous year. Remember, trade and other payables relates to us owing the creditors. So if we owe them more, it means that we did not pay them in the current year. If we owe them less, it means we paid them in the current year. So if we owe them more, it means we saved cash by not paying them, by buying things on credit and using cash for other things. I will have to exclude sales income tax as well as shareholders for dividends. So I only have trade creditors. So for the current year, my trade and other payables was 63,000, and for the previous year, it will be 227,100, which is a decrease. Cash-wise, not that good. Because a decrease in trade and other payables indicates that we paid our creditors and that results in a cash outflow. All right. Now let's do calculations quickly. You are going to take that 9,480 minus 41,700 minus 164,100 equal sign. So our changes in working capital will be a negative. Basically, we have negative working capital, cash outflow, and that will be 196,320. Now take that to 993,600 and minus this 196,320. So you will simply take 993,600 minus 196,320 equal. So you'll have a cash inflow, which is cash generated from operations of 797,280. Take that straight to the cash flow statement, and you will record that under operating activities, and you'll write there cash generated from operations from note number 1. It will be that 797,280. Remember, we had interest paid. There was no information about accrued expense on interest or any information about interest or missing interest. So that 78,000 that we had in our note number 1, we'll simply record it here as a cash outflow. All right, it's interest paid. Paid means there was a cash outflow. All right, let's check dividends paid. All right, because after interest paid, we'll have dividends paid. Information about dividends, we'll normally find it in the retained income note, but for the retained income, we are given the balance at the beginning of the year as 225,000, balance at the end of the year, it's 420,420. There was profits which was given to us. So your net profit after tax, you will simply take that 660,600 minus 270,000. So we will be missing dividends on ordinary shares, which is what goes into the middle. Were we given enough information for us to calculate dividends on ordinary shares? Nope. In this slide, I was given nothing. And when we check at the slide here, I only have shareholders for dividends. I only have final dividends for last year, which is 105,000, and final dividends for this year, which is 120,000. Remember, when you take this to your dividends paid note, that 105,000, it was owed by us to shareholders last year, so we need to pay this year. So at the beginning of the year, we will show that 105,000 in brackets, with brackets, as it indicates your cash outflow. We are missing interim dividends, and there's no information given here that allows us to calculate interim dividends, but we were given final dividends for this year, which really doesn't help us. So we will struggle to find dividends on ordinary shares. And that's where, since the written income note was not given to you, you might have to prepare it. I will start with shareholders for dividends from the previous year, 105, you put it in brackets. I am missing dividends on ordinary shares, which is this year's interim plus last year's final. This year's final. I have this year's final. The only thing I'm missing is the interim, and without the interim, there's nothing I can do. So they didn't give you enough information. You have no choice but to draw this as part of your workings. You will start with balance at the beginning of the year for your retained income. It was 225,000. Net profit after tax will be 660,000 to 600 minus 270,000, and we've got loss due to buyback. Oops. Now we need to read more about that. I'll come back to loss due to buyback. I need to check what they're saying about shares that were bought back. Okay. Here they are saying nothing about shares being bought back. When I look at my statement of financial position and the additional information, there's nothing about share buyback. So since there's nothing about share buyback, I will assume that there was no buyback of shares, because obviously if there was, they would have had to give us more information. And then we've got dividends on ordinary shares, which is what we are missing, which is made up of your interim dividends plus your final dividends. We do have final dividends, which was 120,000, but we are missing interim dividends. And when we add all of these, they need to give us dividends on ordinary shares. We are missing that. And we'll have balance at the end of the year, which is 420,420. And because we have this, you just apply the reverse operation by taking 420,420. You will add, you will minus actually that 390,600 minus 225,000, and that will give you a negative balance of 195,180, which is your dividends on ordinary shares, resulting in you having your interim dividends at 75,120. How did I get that? You simply take 195,180 minus 120. The only figure missing there will be your interim dividends, which makes it easy, because for you to calculate dividends paid, you can just take interim dividends for the current year and add it with last year's dividends. Remember, we said last year's dividends amounted to 105. So if you wanted to calculate dividends paid, you will say dividends paid is 105,000, and then you add it with this interim, which is 170, which is 75,108, and that is your dividends paid. Or you can follow this long route here, and the long route will be for you to write it there as your dividends on ordinary shares, which was that 195,180 in brackets. And you add back your final dividends for the current year, and that will give you dividends paid for the current year, which in this case will be 180,180. You will take that and put it under operating activities as dividends paid. So under operating activities, your dividends paid there. Oh, I missed that. Okay, I started with my cash and cash equivalent. Your dividends paid will be, I'll come back to cash and cash equivalent. My dividends paid will be 180,180. Okay, since I'm on cash and cash equivalent, I'll just go back a little bit. And obviously cash and cash equivalent, I will need to check if I'm given the cash and cash equivalent node. And if it's not given, then I will have to go straight to my statement of financial position and look under current assets as well as current liabilities. Bank will be under current liabilities if it was bank overdraft. And when you look at your cash and cash equivalent, which is given, by the way, you'll note that for 2022, your cash and cash equivalent amounted to 7,500. And your cash and cash equivalent for 2023 amounted to 42,600. But you will notice that for 2022, we did not have bank. If it's not in cash and cash equivalent, you need to confirm if it's under current liabilities in your statement of financial position. And there it is, it's under current liabilities, and it's written as bank overdraft. All right. For last year, our bank overdraft was 60,000 rand, meaning that our cash and cash equivalent for last year will be that 7,500 minus the 60,000, and you'll have it's 52,500. That 52,500 will be negative. Let me calculate it quickly as to what our cash and cash equivalent will be for last year. It was made up of the 7,500, you minus the 60,000. The reason why I'm putting the 60,000 as a minus is because it's a bank overdraft. So we had a negative balance of 52,500 for last year when it comes to cash and cash equivalents. For this year, obviously, we take it straight from your cash and cash equivalents. And for this year, it was how much for this year? Our cash to cash equivalent for this year was 42,600. Now it moved from negative 52,500 to 42,600. So there was a cash inflow, and we need to calculate that by preparing our cash and cash equivalents. Okay, so basically for bank, you will take 32,100 minus 60,000. Okay, let's see what I mean by that. You will simply take, as I've said, you will take that 32,100 minus and then minus 60,000. And the movement for bank will be 32,100, which is a cash inflow, which resulted in us having a positive balance of 32,100. And that will be 92,100. Let's look at cash flow. Cash flow, you'll take 9,000 minus 6,600. It'll give you 2,400. And petty cash will be 1,500 minus 900, which is 600. Your net change in cash and cash equivalents will be 95,200. So how do we show this on the face of our cash flow statement? It will be right there at the bottom. And when you write it there, you will start with balance at the beginning of the year. It was negative 52,500. Remember that balance at the end of the year was 42,600. So take that 42,600 minus 52,000 minus negative 52,500. So you will take 42,600 minus negative 52,500. So our cash movement, which is our net change in cash and cash equivalent, will be positive 95,100, which makes sense, right? Now let's go to taxation paid. Let's see what information we are given when it comes to taxation paid. I remember reading it here. We need taxation for the current year, and it's given to us, made easy, and it's 270,000. And we just have to check where sales income tax is. For last year, it was in trade and other receivables. It was owed to us last year, so we must receive it this year. So that 21,000, when I write it in my taxation paid note, I will put it without brackets because it must be received in the current year. It was owed to us by SARS last year. The next item that needs to come here was income tax, which was given to us in the statement of profit or loss as 270,000. We put it with brackets. And SARS income tax for the current year, where was it? It was in trade and other payables, which is 33,000. It was owed to SARS in the current year. And the fact that we're owing it to SARS, it means for the current year, we did not pay that. So our provisional payments were less than our income tax. That's why it's sitting there. So we will only pay it next year. In the current year, it will be a cash saving. So we will show it in our taxation paid note without brackets. Please note that when you take 21,000, you minus 270,000, you add 33,000. Your taxation paid will be 216,000. All right, and this is simply what I've just explained in words. In case you didn't hear me, at least you can read, and you can read what I just explained to you. To write that note in our statement of cash flow, we will simply write it in brackets so you can actually show it as part of your workings in brackets. You will write it as 21,000 minus 270,000 plus 33,000. Our taxation paid will be 216,000. They hardly ask for the taxation paid note. So you will be expected to show it in brackets, just like I've done here. Let's check our movements under cash generated from operations, right? You will take 797,280, you minus 78,000, you minus 180, 180, and then you minus 216,000. Let's check. You will get a cash inflow under operating activities as 323,100. It's positive, so you put it just like that. Under investing activities, we've got purchase of non-current assets now. That is a bit tricky because now it requires us to prepare a note. Then I'll go back to my note number 3. I will start with land and buildings, and land and buildings do not depreciate. So I'll just compare. Oh, we purchase land and buildings because cost at the end of the year is greater than cost at the beginning of the year. So that means we purchased for vehicles. Cost at the end of the year is greater than cost at the beginning of the year. So we purchased for vehicles, for equipment, we also purchased. But let's just do a thorough calculation on this. Let me just see if there was any asset that was sold. Oh, so we should need to worry about equipment because there's equipment with a cost price of 150,000 that was sold at the carrying value of 72,000 during the year. That's 72,000 during the year. Because they sold this equipment at carrying value, the whole 72,000 becomes our cash inflow, and it will be proceeds from the sale of tangible assets. But I will need the carrying value of this. The carrying value, which is 72,000, I will need it when I do my depreciation calculation. And the formula that I've taught you from the previous videos is this one here. For land and buildings, you'll start with cost at the beginning of the year was 720, and we don't have additions. We have no depreciation, disposals. We have no depreciation. Carrying value was 1.2. That means X will be 480,000. For vehicles, note that carrying value, if you decide to work with carrying value for vehicles, you will simply have 660,000, and we don't have additions. We did not sell. It was specified there was no vehicle that was sold. We calculated depreciation, which was 192,000, and the carrying value at the end of the year is 918,000. Reverse operation again, it will give you additions at cost, which is 415. For equipment, you will have carrying value at the beginning of the year was 420,000. There was a disposal at carrying value, which is 72,000. Depreciation was 63,000. So all of those will be in brackets. Carrying value at the end of the year was 525,000. So you will manipulate this to calculate the cost, which is 240,000, by working backwards, reverse operations. All the rates, you add them up and you prepare what we call tangible assets purchased. For land and buildings, tangible assets purchased will be 480,000. For vehicles, it will be that 450,000. I'm putting them in brackets because they were purchased. They resulted in a cash outflow. For equipment, it was 240,000. You add all of these up, they will give you tangible assets purchased, which is 1,150,000. Please note, if you're still struggling with this, please check the previous videos because I've explained this already. I'm just putting everything together in this exercise or example. Now, under tangible assets purchase, I will have that 1,170,000 in brackets. It represents all tangible assets that were purchased. And proceeds from the sale of non-current asset was that 72,000. You put in the selling price, the price at which you sold that asset. You don't focus on profits and carrying value. Here we only talk about the amount of money we received by selling that specific asset, and that is 72,000. So under Investing activities, let's work out our cash movements quickly. Under investing activities, please note that if you have a fixed deposit, it'll fall under investing activities. An increase in fixed deposit, it's a cash outflow. The difference will be a cash outflow. A decrease in fixed deposit, it's a cash inflow. It represents the maturity of your fixed deposit. People, please don't make this mistake. Money that is in the fixed deposit doesn't result in money that is in your bank account. When fixed deposit increases, it means you took money from your bank account, you put it into the fixed deposit. So that is a cash outflow. An increase in fixed deposit is a cash outflow. A decrease in fixed deposit, it means it's a cash inflow. It means that the movement was taken from your fixed deposit to your bank account. These are two different things. You have your bank account, you have a fixed deposit. A fixed deposit, it's fixed. You only get it after a specified date. And when you get it back, we said it has matured. It means it has reached its maturity date. So if you were intending to invest money into that fixed deposit for 5 years, it means you will only get money from that fixed deposit after 5 years. So when you get it back, it will move from your fixed deposit account into your personal savings account. So that is a cash outflow. An increase means that you're putting more into that fixed deposit account. So you're taking money out of your personal account and you're putting it into your fixed deposit. So it's a cash outflow. An increase in fixed deposit is a cash outflow. Now, that is just me adding a couple of things there. So I will have under investing activities negative 1,170,000 and with 72,000. And then my movement will be 1,098,000, which is a cash outflow. Let's check under financing activities. Financing activities, it's all about proceeds from the issue of shares or the buyback of shares. So there was nothing about the buyback that was given to us. And proceeds from the loan. Proceeds from the loan, please note that it results in the increase in a loan, but proceeds from the loan, when your loan increases, it means money came in, you received a loan. So an increase in loan is a cash inflow. A decrease in loan represents a cash outflow, as it means you were repaying your loan. That's the only way your loan can decrease. It can't be interest because interest increases your loan. So the only thing that can reduce your loan is when you pay it back. Let's check on the shares, what they're saying about shares. If shares for the current year, your share capital for the current year is more than your share capital for the previous year, it means you sold shares. Let's see. For this year, it is 2,160,000. For last year, it was 1,440,000. So yay, there is an increase in shares, meaning that you issued more shares. And the issue of more shares results in a cash inflow. Okay, so you take the two amounts, you minus them, the difference will be a cash inflow of 720,000. As I've said, there was no repurchase of shares. When it comes to the loan, I will need to go back to check what they say. An increase in loan, remember I said it's a cash inflow. A decrease in loan, it's a cash outflow as it represents the repayment towards the loan. Let's check our loan. Loan for this year is 600,000. And loan for last year is 450,000. So there is an increase in loan that is proceeds from the from the loan. Wow, issue from the loan. So we received a loan. So proceeds from long-term loan will be 600,000 minus 450,000. And that will give us a cash inflow. I did specify an increase in loan means that we received money. We took more loans. So when we take a loan, we are taking money from someone that you need to pay back. So when you take more money from those people, your bank account will decrease, but later on you'll have to pay interest on that. So it has disadvantages, and it also negatively affects your liquidity and solvency ratios. There was no repayment of the loan that was given to us. So you will simply calculate cash movements under financing activities by taking 720,000 plus 150,000, and that will give you 870,000, which is a cash inflow. So what are we going to do now? You are going to take cash generated from operation of 323,100, subtract this 1,098,000, Add cash generated from financing activities of 870,000. It should give you the same net change in cash and cash equivalent of 95,100. Awesome, isn't it? Isn't it interesting? Cash flow statement is quite easy, isn't it? All right, please, these are the details. If you need extra lessons, I can only do Zoom lessons or what you call it, Microsoft Teams, yes. Otherwise, you can contact Mrs. Kujinga there. Otherwise, I only do Zoom unless you reside in Springs or you reside in Meertin or Vereeniging. Obviously, if you reside in Vanderbilt, you might have to, I might have to charge you around 200 just for transport if you want me to come to you. Otherwise, we can do Zoom lessons. If you stay in Cape Town, don't be scared to contact Mrs. Kujinga, or you can contact her if you also need Zoom lessons. All right. Before I go, let me just give you an activity. All right, just for homework. So you will prepare the full cash flow statement. Let's see which one. All right. Do classwork one. You can pause the screenshot and save it on your phone or laptop. Pause the screenshot and save it on your phone or laptop. Pause the screenshot and save it on your phone or laptop. And then you can prepare this. That. Dividends paid. Taxation paid. Workings on tangible assets. And then prepare tangible assets purchased. And then prepare the full cash flow statement. For solutions, please check out the next video. Please don't forget to subscribe, inform your friends to check out my videos. And if you get stuck, please watch all the videos. Guaranteed you should get a distinction in accounting if you master and you watch all the videos that I've prepared. But if you still struggle, as I've said, these are the contact details for maths. They are contact details. I do not provide extra maths lessons, so I only do videos on those. All right. All I can say, ke hore ke a leboha ho menahane, and Victoria Gilewa Hulu. Victorians are watching a lot of my videos and I really appreciate it. Thank you for your support. Cape Town is second and then Johannesburg. I really appreciate it. I'm still waiting for my hometown, Vereeniging, the Vaal. Hopefully you guys will also come on board and watch my videos and just to excel in maths and accounting. Okay. Ke leboha ho menahane. Kgotso.